Hello, folks. Welcome to Market Trends. This is David Russell, Global Head of Market Strategy at TradeStation. It's great to be with everyone today. All right, wait a second. There we go. Today's webinar is called Main Street Rebounds as AI Pauses. Although I might, you might actually want to rename it something along the lines of rotation into the Russell, into small caps, which might really be the big story today. I think it's interesting. We're going to look at some of the things that are happening now, but as long as I can remember, at least for many years, people have been saying, we're going to get a rotation to the Russell. We're going to get a rotation to the Russell. And it just has never happened. AI came along and everything else. These are standardized returns from the ETFs we're going to be talking about. But, AI came along and kind of slowed that down and everything. And the mega caps kept going. But now could be some real reasons to think that the long awaited rotation into the Russell could actually be taking shape. And we talked about this on our webinar on Monday in State of the Market. We're going to be looking at it a little bit more today. These are the ETFs. And let me just now get to some of the other key things we want to be doing here. So if you go to tradestation.com and you go down the page, you can see this article here called Main Street Rebounds as AI Pauses. That's going to have a lot of the information we're going to be covering in today's presentation. But I think the big story today, these are the key those are the standardized returns. If you look here, look in the last 5 days. Look what we're kind of seeing here. We're seeing some real strength shifting toward things like small caps and metals and energy. We are seeing some strength here in software coming off the lows, Salesforce.com and some other stuff. But these remain, these have been struggling here for a while. I think when you look at the kind of blended change overall, I mean, before the 5% rally in the last week, this thing was down 7 or 8% in the trailing month. So we can see that software is kind of weak, but we can see more strength in things like the small caps kind of gradually coming to life, energy, and very, very interestingly are some of the things we're seeing in the banks right now. So as we look overall, look at the blog post here. We basically have a look at this chart, and I want to just quickly mention this because if you look at the chart that we had basically look at what we had covered on state of the market on Monday. We looked at a chart similar to this where basically we had really fixated on the low of the 29th, October 29th. It was a bearish outside day. It marked the high for the market. It was at basically 6852 on the S&P. You can see we stalled, went down, stalled, went down. Now we're back and we're staying at it. And what's very interesting here as well is we're also above this level at 67.75, which was a high on November 14th. So we're now at a spot where people may see actually the potential for something more of a kind of extension to the upside. And I think that's the important thing. We've been talking about it. And we basically had said that there was a chance after a thrust like this off the low. You can see how we held this low over here. What's also interesting is if you look at a breakout all the way from this, there's a high in February when we broke out above it in June. If you look at this entire run, a 50% retracement is almost exactly where we bottomed back here on, this was the 21st. This was, I think, a Friday, the 21st. And then basically, so that's a 50% retracement of that whole move. It's also a false breakdown under the October 10th low. So this is pretty significant support at 65.50. And then we go up and we're now above that. And then you can see the resistance level at 67.75. We basically got above and we've stayed above. And like I said on Monday, I said, there's a good chance we don't even test it. We simply move sideways as that 10-day simple moving average catches up, and that's what we've seen. Now, I think what's important here, I want to show you some other stuff on the slightly longer chart, is that this now shows us the rate of change of this 50-day simple moving average. And you can see when the market rallies, it goes from negative to this big rip. It's basically the rate of change of this line. It has both day-by-day change with a little histogram, and then it has an average. The key thing with this is it often you can see the market, it's not always true, but what happens is the market at times can have a rally, and then what happens is you'll have a period of a month or two where basically the moving average basically slows down and almost stops. Now you can't really see it on this chart, but you can see it down here with MA speed. Now this is one of the indicators that we share with you in the zip file, which is at the top of the blog post here. But anyway, I think the thing that's interesting about this is that basically you can see at other times we pulled back. Now, if you look at this level in like March of 24, we basically had that level of March of 24, and then we were at it again at the end of May. So that was more than 2 months of going nowhere. And as a result, the 50-day moving average basically stopped. So look back here at the current time. Where are we? We have basically, the high from mid-October, and that was basically we stayed at it almost 2 months later, and the 50-day moving average also basically slows way down. So very often we've seen this at other times. When you had that sell-off in July of 24 as well, which was right here, that big tech sell-off, you can see coming out of it, we also had the stall, and then we extended back higher. So if we look at this situation now, this actually may create the potential for a completely new advance. And we could potentially say here that this advance basically ended. We retraced half of it. We paused intermediate term direction, went neutral essentially, and now we have the potential for it to turn bullish again. I think it's important to realize that. We also look at the 9-day rate of change, and this is not always a super accurate thing, but it does often kind of help you. When you get a thrust like this to the upside, what you'll often see is it then fades, but the market actually, once you get a thrust of that kind of strength, the market remains stable to trending upward. This happens on various occasions when the 9-day rate of change has a very aggressive, thrust to the upside. Now, it's not always the case, but there are times when you look when it kind of gets up above 4 to 5%, that it's then followed through with steady upside and waning volatility. And that may be what we're seeing take shape right now. And you look at the market barely moving today, but then beneath the surface, there's so much interesting stuff happening with banks and biotech. And I think that's really interesting. Banks and biotech here are really what's kind of, there's some things happening beneath the surface. And I want to just kind of mention that because, Mark Douglas always said, you have to focus on the now flow of opportunities. The market really doesn't care what you want. It will give us opportunities very often. They might not be in areas we care about. It might not be things like AI that we enjoy. But the fact is that there are things happening in the market. And this webinar is dedicated to helping you find those market trends which may be able to offer opportunities. Now, let's look over on MT Breadth. This is one of the workspaces we share with you guys. And what's interesting about MT Breadth here is that, we can see the advanced decline line getting, back near an all-time high. Let's actually really quickly look at the Nasdaq. And the Nasdaq here, it's also in a similar sort of setup. It's not really telling us anything all that meaningful. I wanted to show you this measure here, which is basically the equal weighted index, the RSP. And what's interesting about this is the RSP is equal weighted. So it's basically going to, when mega caps stop leading, RSP should outperform. So if you actually look here in this chart, for example, when this indicator goes red, it means that breadth is improving. It basically means that the cap weighted index, the big S&P 500, is underperforming the market cap weighted. That's what it tells us. So if we look right here, the equal weighted. So basically, if we look right here, we can see, in the last 63 days or 3 months, the SPY or the S&P is outperforming by a huge margin. In the last 2 months, is outperforming, but in the last 1 month, the RSP is outperforming the last 10 days, the last 5 days, and today. So this is starting to show us a certain amount of rotation away from the large growth stocks. Now let's actually look over here on MT Main, go to price grid. Might be kind of interesting to take a look at this. And let's look at the S&P 500. I always like to do this. Let's look on a 5-day performance. We can basically see in the S&P by looking down this list here that the 269 members of the S&P are up in the last week. But it's also interesting. Now let's go to I don't have it on here, but we go to the biggest. Go to. I'm going to just add study market cap, because it would be interesting to actually see how the big names are performing overall. And let's see where are the really big names. So I'm going to go ahead and add market cap, and then I'm going to just move that up. And now let's see how the really big names are performing. So if we look at the really big names like NVDA, Microsoft, Google, look at all this kind of red in the last 5 days, the last 21 days, even though the S&P is positive in that time. Let's look over here. How long has it been? NVIDIA has not made a 52-week high in 25 sessions. Microsoft's gone 88 sessions. Amazon 22. Look at the stocks that are making highs today. Click on distance from 52-week high. Dollar General, Invesco, Teradyne, which is interesting. We mentioned the strong kind of relative strength that was really emerging in the semiconductor equipment companies like AMAT, Teradyne, KLA-Tencor, Those have been really strong inside of chips. In fact, it's very weird to look at chips right now and to see that the big performers are companies like On Semiconductor, ADI, Analog Devices, Intel, and the big names like NVIDIA have just been drifting. So it's very strange. I've never seen something like this when NVIDIA goes nowhere and chips go higher thanks to Texas Instruments. I mean, it's a pretty unusual sort of behavior that we're seeing. So I want to just kind of mention that there's different names kind of outperforming here. When we look at the companies that are doing best in the last, let's say in the last 2 weeks, what do we see? Look at the average market cap on them. We have App Loving, which is App Loving is doing well. It's 200 billion. But if you kind of look at the top 20 companies overall, the biggest ones are basically Advanced ADI, which is Analog Devices, Intel. Wow, can you believe that Intel is barely bigger than ADI? But you can see that you have the strength in these relatively obscure names, On Semiconductor, things like that. Microchip Technology, which is also a semiconductor equipment company. So want to just kind of put that out there to people is that basically we are seeing this kind of rotation and we are seeing the breadth happen. So I think that's an important thing to realize. I also want to just quickly remind you there is a Fed meeting next week. I'm not going to get into a lot of the economic stuff right here because some of the deeper rotation could be the real thing that's happening right now. The Fed is meeting. Everyone expects a rate cut, things like that, blah, blah, blah. Like I would just say about the Fed is we continue to get structural evidence, I think, of inflation slowing down. I was talking to some people involved in construction and things like that, and they actually were trying to get a project done. They had a budget of about 2.5 million, and it came in like way under 2 million. There was way more people bidding on it. It was a road project than they expected. And so I think what's interesting right now is that we are I'm hearing and seeing a lot of anecdotal evidence that there is slowing across the general non-AI economy. And I think it puts us on a spot here where as time goes on, the Fed, it's going to be difficult to think that the Fed is, that the rate cuts in some ways at this point may be getting more probable as we go into next year because there are signs in different ways of prices coming down, especially you look at things like rents and things like that. Just overall, those things will continue to drag on the overall inflation, and it creates an environment where rate cuts could be more probable, and we could see a steepening of the yield curve, and that could be something that is also beneficial to the banks. I think it's important to realize. So I want to quickly look over here at some stuff involving the Russell. I think the first thing is this is our chart that we use in our Monday webinar when we look at the indexes. This is the Russell, the high of the Russell back in late 21. Now what's interesting is you can see that we kind of teased it back in November, right around the time of the election. I think it was right after the election, and then we sold off. Now we basically got above, pulled back, really had not much of a pullback at all. I was talking to a technical guy who really looks at some of the major weekly cycles, and he was saying that the Russell should have gone down, it should have, in air quotes, should have gone down here. It should have revisited its July low. And the fact that it didn't, this is based on different probabilistic models. And the fact that it didn't basically means that it's having surprising relative strength. The fact that it's not pulling back as much as probabilistic models say it should. I mean, for me, I always just kind of look at levels, and to me, this level emerged as being relatively important. And I think what's important here is that we are now setting up. If the Russell stays here through tomorrow, this will be an all-time weekly closing high. And we have mentioned many times that when an index ends the week at a record high, very often there is follow through. And I think right now, this is a very important thing to realize. It could be happening to the Russell. Here's another chart we've done for the Russell. Let's actually do this. This is another thing on TradingView just because it's easier to show ratios. Look, this is a long-term. I'll do it on weekly. I think 2 weeks probably. There we go. 1 week charts are probably better. Basically, this shows the Russell as as a ratio against the Nasdaq. Let me hide these other little things. All right. What's interesting is if you look basically on the weekly chart, you can see that, after the kind of financial crisis and we got into the recovery after the financial crisis, the Nasdaq has absolutely crushed the Russell. This shows the Russell against the Nasdaq has underperformed massively. I think we all know that. But what's interesting here is that there are some signs of this bottoming to a certain extent. And if you look at different times, like if you look throughout the year 2022, basically tech stocks, large growth tech stocks lagged and the Russell outperformed. So I think it's just important to realize is that, and then this was when AI started booming as we came out of that. But what matters here is that there are some signs of this kind of bottoming. And from my perspective, when you look at a lot of the strength that has occurred in the Russell has occurred at a time when people are looking for the Fed to be more dovish, and that's what these different kind of arrows mark here when there was dovish turns of various kinds. It doesn't necessarily mean the Fed was cutting, but it means that the expectations in the market had shifted in that direction. And so I think what's interesting here is just that this seems to be stabilizing. And if let's now look at another chart. I want to just very quickly show you this. I'm going to just show you now the Russell by itself. Look at the Russell on, let's look at it with 4-hour bars. Now look at the high we had on the back here. Well, actually, let's look at the NASDAQ first. This is, I think, very interesting. Look at the high of the NASDAQ on the 12th of November. We basically are stuck at that level. Now let's look at the Russell. The Russell is above that level. Now look down here. This is now look at the high on the 20th of November. The Russell got back above it just 4 days later. Now look at where the NASDAQ was. When the market sold off, had that big, this was when NVDA reported this day. When NVIDIA reported, it jumped and it got smashed down. And then look, basically it had a level there around 25,200. We got smashed down and it took us basically a long time. So this was from basically the 20th. We did not get back above until the 26th. So the Russell got back above more quickly. The Russell is now above its high on November 12th and October 31st. And now look at the NASDAQ. The NASDAQ is not. Look at the NASDAQ as a monthly chart. You can see here that it's at a much lower spot. It's barely positive on the month versus where it was at the end of November. But now look at the Russell on a monthly chart. So we can see here that the overall, I mean, the Russell here is going at, let's see, this is not an all-time, I mean, it's getting close to a record closing high, and the NASDAQ is nowhere close to that. The NASDAQ is still stuck at this level. Now, what happens if people say, this is maybe kind of tired, and, you might have the potential for something of this to happen. Once you make that lower high, if we make a low, and it's not to say it goes all the way down, but you can just enter a period of just complete sideways movement. And that is what often would happen in a situation like this. So I want to just mention, because I think it's important to realize there seems to be something of a kind of a shift here. Now, I think it's important also, if we take a look over here at, I want to just quickly mention that, we had Microsoft, there was this report that Microsoft then denied that they were cutting certain sales targets. But again, the market doesn't really care that much. I think the thing we're really seeing here is, like I said earlier, software has been very heavy, high multiple sort of area. Microsoft is, the biggest software company. And look also here at Microsoft. Look at some of these patterns we have here. We're basically, let me actually just adjust this so we don't have those arrows. But make it a little thicker, you can see it better. This is a bear, actually a bear flag. And then also, what do we have here? Something of a bear flag, you could basically say here. So what do we have? This is stair stepping down. That's what you could say about Microsoft. I think that's interesting just to realize, we had today something like Snowflake. I mean, people don't care. They're just hammering it. It's also interesting to look at companies like IREN. This was a major, AI name for a long time. It was just had this massive rally. It went from like 12 to 72 or something. And look at it, they basically did a capital raise. SYM, the robotics company, yesterday they did a capital raise. When people start doing capital raises, they're basically saying that we think our shares right now are good to sell. We think they're expensive. And I think that's important to kind of realize. They're not buying back stock, they're selling stock. This is often something that you will see when things are getting kind of fatigued. Now, CRDO, this is a fiber optic company that has been also very strong uptrend. And what's interesting is a very strong earnings report yesterday, and there it is, failing to break out. And I think, again, we're seeing these patterns all over the place in tech now of fatigue and of heaviness. Now, look at NVDA. Look at this, potential downtrend here in NVIDIA. It basically, you could look at this, depending on how exactly you want to draw it, you could look at kind of a line essentially like this. It couldn't even get above it with earnings. It smashed down. that this line might be kind of flattening out more like this. I mean, in my view, it doesn't really matter. It's important just kind of realize that this is just kind of stuck and directionless right now. And with the Russell hitting new highs, NVIDIA is still what? I mean, it's at 184. It's more than 10%, 15%, something like that below its all-time high. Meanwhile, the Russell's hitting new highs. Now look at the bank index, BK. What is it? The BKX. I'm sorry, the Nasdaq Bank Index. Look at this on the weekly. Look at this. It's clearing that. It's basically clearing the high from 21. This was a really big thing. This was when we had the Silicon Valley meltdown. So I mean, we're looking at something here, I think, in banks that is very significant, and there's news on it, which I'm going to cover, which basically has been utterly neglected by the press. I think it's very interesting. It's very important. I don't know why they've missed this, but there's something potentially happening with the banks. I think it's important to kind of realize. Another interesting note, I saw barchart.com. They basically did this little note about Salesforce.com. Salesforce had good earnings yesterday, bouncing a bit, but they said Salesforce is it's been under its 200-day moving average for 189 days, which is its second longest streak in its history as a company. So I think that's kind of interesting. So I think what's interesting here is that first of all, I think that we can basically say to a certain extent that AI is no longer really the dominant story in the market. And that might be kind of heretical to say, but if we actually look at what's happened, we have seen very significant news in healthcare in the last few weeks. Eli Lilly shooting to a new high. Today we did a trading view idea on Amgen forming kind of a bullish, triangle up here, potentially ascending kind of triangle against the old highs. So you can see how it's pushing against these old highs from last year, and it's basically, potentially just consolidating here. And I think that's important to realize. Eli Lilly. But let's jump over here. You can actually look at my turn on my 21-day exponential. Boom. Now remember on TradeStation, we can go over here and we can go to our MA tools. I already loaded the S&P 500 in here. But if you look at something now like, which companies are pulling back and testing the rising 21-day, what do we see? Eli Lilly. What do we see? We see IQV, this crazy healthcare stock that we've talked about at different times. IQV, it's some kind of diagnostic life science. We had basically talked about this over here when it was coming off this low. A lot of these names here are in spots where they've really struggled for a long time. Remember, we were talking about things like Intuitive Surgical as well as it's been coming off these sort of lows. A lot of these are names that have been completely neglected for the last 12 to 24 months, and now they've been coming back. So I think it's important to kind of think about that. Things like Merck here, all these names kind of have been jumping back to life. And again, the reason why we have this workspace with the 21-day with the MA test is that when something pulls back to test the level, it will light up this indicator, and this is basically in MT main, and then it's in MA tools. So I want to just kind of mention that. I think that's kind of interesting. There's also some news in the biotech today with a company called CAPR, I think called Capricorn, had some kind of bullish news overall. But I think it's important as we kind of look over here on our key ETFs and we really look where is the strength in the last week under industries. We have strength in metals, but we also have XBI actually is not up that much in the last week because they had a pullback. But if you kind of look in the last month, we see biotech XBI is doing, it's this the second best, it's the second strongest performer after gold miners. They had a pullback. But look here at XBI, for example. All of these here um, are showing, they're above the 21-day exponential moving average. They're hitting highs recently, unlike NVIDIA. These are some of the signals we look at. Remember, we dig here into things like price grid. We look for things that were recently hitting new highs, for example. And if you look at something, we just look at things like, if we compare XBI against NVDA, we can see that XBI hit a new all-time high, 5 days ago. NVIDIA was 25 sessions ago. If we look at the moving averages here, we can basically see that, the biotech's the 5 days above the 20, and this one, the 5 days below the 20. It just tells us right away. We can see that the 50-day simple is above the 20 is above the 50, and for NVIDIA, it's just the opposite. So this does allows us to very clearly and objectively identify some of the key patterns. Actually, I realize I'm covering my screen there, so you can see over here what I'm talking about. This is XBI, and you can see this indicator, the moving average order. It tells you if the fast is above the slow. It's color coded and you can sort it based on that. So there's two different indicators that these are we include in the workspace. All right, so got to keep moving here. So what's been happening in banks? Well, Michelle Bowman is what is her title? Is it vice chair of supervision? But she is one of the big people at the Federal Reserve. Aside from being one of the dovish members of the Fed, she's also someone who is in a position of the supervisory stuff. And she basically made some comments on the banks when she was saying that let's just look at Bank of America, for example. She was basically saying that, making comments suggesting that there are not going to be strict capital requirements and also things that essentially are kind of favorable toward toward M&A. And I think that's just an important thing to realize. That is the kind of backdrop people are going to be, recognizing. And I think that's right. When you look at the banks, Wells Fargo broke out to a new all-time high yesterday. Some of the other banks have been hitting new highs, and this could be something where people can kind of step away from AI and they can say, healthcare and banks, these are real industries and they actually have some fundamentals as tailwinds in their favor that they have not had in a while. So I really think it's important to kind of recognize that some of the things we really seem to be seeing beneath the surface here is a bona fide rotation taking shape as we head into the new year. And as you look at some of the financials and stuff, I mean, Wells Fargo here. Remember, this company's going to report earnings in like late January. A lot of these with the breakouts, these may simply remain strong, and it's possible that the large tech names will simply be in a kind of purgatory through earnings season. People are going to say, "Oh, Meta came out and they cut investment." Well, now we were waiting for everyone else to do it. Now we're going to wait for NVDA to cut guidance. We're going to wait for this, and now we're entering that period where the kind of the buzz, the excitement is fading, and things are shifting in a different direction. And it's now toward doubt and looking for things that are starting to work now, as opposed to things that have been working for the last 2 to 3 years that have run a lot and they're now not working as much. And I just want to return to the fact that these companies, IREN and SYM, these guys raise capital. And I think, there's more talk about how these companies like, AI, open AI, like they're not profitable and all this sort of talk. When companies are profitable, they give money back to the shareholders. And when they're not as profitable, they ask the shareholders for money. And people can be focusing, hey, the banks with these capital requirements, that means that money's going to be moving from the company to the shareholder and not the other way around. And I think that's just an important thing to be thinking about here. So these, I think, are some important shifts we might want to see going forward. And we look at where the Russell is right now, kind of pushing against these old highs. This might be something that I think, is kind of the bigger narrative to be focused on, especially as we go into the Fed meeting and stuff. The Fed meeting might give the confirmation if, simply people want to, get a little more confirmation, and then we might see a more significant sort of rotation toward the kind of Russell and things like that. The last few things I want to very quickly mention here was that Caterpillar is also kind of a non-tech stock, but it has exposure to data centers. But here it is, basically breaking out to a new all-time high, and also Ralph Lauren. I mean, this company has been very strong, and here it is, just kind of pulling back to some interesting pullback after this rally here. I think this might be something that kind of grabs some attention. So those are the last few things I wanted to mention. Hope everyone has a great day. We'll be back on Monday for State of the Market. I hope everyone has a great weekend, and I'll see you next week.